Did you know that you can buy a property for a few $100s? In this video, I'm going to show you how to buy a property for a few $100s by investing in tax delinquent properties. I'm also going to show you how to find them. Now, tax delinquent properties are properties where the homeowner hasn't been paying their property taxes. Now the government is going to come in there, take their property, and then they're going to sell off the property for the property taxes to get covered. Investing in tax delinquent properties is a very unique way to invest in real estate. Before you start looking for tax delinquent properties, it's very important for you to understand the process. In most cases, the government or the county is going to be coming in and taking back the property from the homeowner, and they're going to be selling off the property taxes to an investor like you and me. It's also very important for you to familiarize yourself with specific laws and regulations in your specific area, because this is going to vary county by county, state by state, etc. I know you want to get into the good stuff, so here's a little tidbit. This is how you're going to make money with tax delinquent properties. So whenever the property is getting sold off at auction, you're going to be buying the property taxes. Now what's going to happen is now you're going to buy the property taxes and you're going to go to the homeowner saying, hey, I have paid off your property taxes, so now you have to pay me back that amount plus whatever interest that is legal in your specific area. Obviously, there are going to be some rules behind how much interest you can charge, because you can't be going out there and charging 100% interest on the property taxes. In most cases, it's around 10 to 15% you can charge on property taxes. So let's just say you bought this piece of property's back taxes for $1,000. And yes, this is absolutely doable. You can do it for less as well. I've seen property taxes go as little as $100. But for this example, we're going to say you bought this property taxes for $1,000. You're going to go to the homeowner and say, hey, you now owe me this $1,000, and now you have to pay me 10 to 15% interest on the $1,000 that you're going to be paying back to me. If this doesn't happen, if they don't pay you back that $1,000 plus the interest, you can then go in there, foreclose on the property, and take control of the property. I know that sounds very harsh, but if you don't do it, someone else is going to do it. This means that if they don't pay you back that back taxes plus the interest, you can foreclose on them, and you can now own a property for as little as whatever the unpaid taxes were. In this example, it was $1,000. Once you have a good understanding of the process, it is now time to start looking for some properties. You can find information on tax delinquent properties through your county's website. You can call the county clerk, or you can be contacting the governing agency that is holding the auction. You can also work with a real estate agent that specializes in tax delinquent properties. Yes, they're out there, but you will have to do some searching to find them. Here's something practical that you can be doing right after the end of this video. Now, I'm going to give you a free way, and I'm also going to give you a paid way to do this. The free way is literally just to pick up your cell phone, call the county clerk's office, and ask them about tax delinquent properties. They're going to probably give you a list. If you want a faster way of doing things and you don't want to spend all your time calling people, getting passed around to a bunch of different people, you can sign up for a membership on PropStream. There's going to be a link in the description down below this video. I use it personally. That's where I go to look for my tax delinquent properties. I'm also looking on foreclosures.com. I will leave links to both of those in the description down below this video. Basically, if you want all the information at your fingertips and you don't want to be jumping through a bunch of hoops, go ahead and sign up for those memberships. They're not crazy expensive, and again, I use them personally. This is where I do all my digging. Again, I'll leave a link to foreclosure.com and PropStream down below this video. Next, after you have found a property and before you get even to the auction and ready to bid on the property, it is very important, very crucial that you understand you need to evaluate a property. You need to understand that the property will actually make a good investment. This means looking at factors like location, condition of the property, and I will say this because this is very important, and this is the biggest risk to tax lien, tax delinquent property investing. You don't really know what you're getting yourself into, because all you can do is get an address for the property that has unpaid taxes. You can go there, drive down the street, you can see the property from the outside. This can throw up some major red flags because you can't look inside the property, you don't know if the foundation is good, you don't know how old the roof is, all these different things that come into play. They are a big risk, and that's something you need to be aware of. Obviously, but after you buy the property, you can go in there and do all the inspections that you want to do. You also need to be checking for if the property is going to have some potential for some growth, so appreciation. Important to check for any other liens on the property, but in most cases, that whenever you go out there and you buy the unpaid taxes, that the mortgage, that's whatever's on the property, gets wiped out, so now you own the property free and clear. It's also very important to consider other liens that are on the property, but in most cases, whenever a tax delinquent property is up for auction, that if it has a mortgage attached to that property, that whenever you buy the unpaid taxes, that mortgage will become void and you're just left to deal with the other liens. Before I get into the auction side of things, hit that like button for me and turn it blue. Also, while you're down there, hit that subscribe button and click the bell icon if you want more videos like practice, teaching you everything you need to know about real estate investing. Once you have found a property that you like, that has potential growth, that doesn't look so crazy and damaged from the outside, and it has a good location, it's now time to prepare for the actual auction. This includes setting a budget for yourself and getting financing set up. And by financing, you can either have it in all cash, you can go through a hard money lender, you can go through private lending, etc. I'll touch on those things in just a second. It's also a good idea to research comparable properties in whatever area that you are wanting to purchase this tax delinquent property in, because if you didn't know that basically everything is based off of comparables. So single family homes are based off of other single family homes in that area. So if you have a 3-bed 2-bath 1,000 square foot home, other 3-bed 2-bath 1,000 square foot homes, if everything's exactly the same, you can reasonably assume that your property is going to sell for what those properties did. This means that if properties are selling for $50,000 in whatever area, you don't probably want to spend $10,000 at the tax auction and might have to put, $70,000, $80,000 worth of repairs into it, and then you're in the hole. That's an extreme example, but you get what I'm putting down. On the day of the auction, be sure that you arrive early and get prepared to bid on the property that you're wanting to buy. And now, this is very important. Stay within the budget that you've set with yourself before the auction, because when the auction begins, you're going to feel a bunch of excitement, and don't get caught up in that excitement, because I've seen it too many times where real estate investors will get caught up in that excitement and then they'll bid over, let's just say $30,000 over what they were originally setting their budget for, and then it ends up biting them in the butt later on. Don't get caught up in a bidding war. Focus on what really matters, and that is making money on the property. If your bid is successful, yay, congratulations. Now you have to pay those unpaid taxes plus any association fees that come into with it. Here's something that not a lot of people talk about. In most counties, again, you need to be familiar with the specific laws and regulations based off of your county, but in most cases, you can put 10% of the overall price. So let's go back to my example of $1,000 of unpaid taxes. That's how much you are wanting to buy the unpaid taxes for. So 10%, you can put only 10% down on the unpaid taxes. So whenever the day of the auction, you bid on $1,000 of unpaid taxes, you only have to put down $100. And then you have 1 to 2 weeks, again, depending on the specific county, state, etc., that you have 1 to 2 weeks to come up with the funding. Once you won the auction, it is now time to become the owner of a tax delinquent property. You need to make sure that you work with a reputable lawyer or a title company to ensure that the transaction is handled properly and all necessary documents are signed and filed. Investing in tax delinquent properties is a very unique, but also a very lucrative business if you understand the process, the risks involved, and don't get caught up in a bidding war once you found a property that you want to bid on. Stay within your budget. If you want another unique and very lucrative way to invest in real estate, there's gonna be a video popping up on your screen right now, so click on the video. It's gonna be somewhere up in here. But until the next video, I'm out. See ya.